Hello friends, welcome to my channel and thanks for watching this video. Friends, we have ended with one short week and this was indeed a very tepid week if you are looking at the overall Wall Street. But the big picture over here is there are lots of things which has happened, which have been happening, which has and it will have a big impact moving forward if you are looking at the market, more specifically the US market, but will have repercussions across the globe because the reports or the news are very impactful. I mean, if you're talking about the stock market, the finance, the economy, and obviously geopolitical plays a very vital role. Although I try not to talk much about geopolitics, but because it creates a lot and lots of impact. I mean, market try to factor in each and every uncertainty or each and every news that creates an uncertainty. So with this, let us discuss what has happened and what will probably happening or what will probably happen in the next 1 week or in the next upcoming week. So I'll welcome you all to another session of USA Weekly Market Report. But before that, if you haven't yet subscribed my channel yet, just hit on the subscribe button and also hit on the notification bell along with the all button to get my updated video notification. Now you can clearly see the flash job reports totals 236,000 in March near expectation as hiring pace slows. I mean, it is very near to expectation. Now the question is, what will Fed do? Okay, and the kind of statements they have given, they are looking really very bullish as far as the interest rate hike is concerned, and they want to kill the inflation. I mean, what they have said, what they will do, it's a completely different thing. And you can clearly see before the weekends, treasury yields tick up ahead of US jobs report with many markets closed for holiday. So this is another important thing. I'll discuss about it as far as the charts are concerned. Okay, but it's not about the numbers, it's all about the commentary and the actions which Fed will take, I think, in the month of May. And you can clearly see this geopolitical tension is not at all going away after 1.5 year. And you know we can wish that it will not spurt further. And if things gone wrong from here, obviously the repercussions will be far more devastating because these two countries are exporting countries, and problems over here can create or can push the inflation much higher than one can expect. And I've been talking about this thing for the last couple of months, that it's time to sit on the table, and if you consider yourself as a developed country, play a piece, be a peace factor, not whatever things are happening, it's not at all giving you any kind of confidence that this kind of geopolitical tension will go away very soon. Okay, the next one, Goldman Sachs just turned bearish on BMW and others, and Tesla could be to blame. I mean, if you don't know, Tesla has again reduced its price for US from 2 to 6%, so you can go and check out that news. So if you are really interested and if you think now the price for Tesla is good for you, you can go and check out them. Apart from that, China's economic recovery is taking longer than expected. I mean, obviously this creates an impact not only in the local market but across the globe. But it will create a twin impact because the China is the biggest consumer of commodity. Consumption boost will push the commodity much higher, and at the same time there are lots of demand challenges. So I mean, an economic recovery will push the commodity prices much higher than one can expect. So it will be a negative thing for importing countries, okay, including US, because US is not the producer of each and every commodity. And yeah, as I told you, Tesla cuts US prices for fifth time since January. I mean, this is not at all positive. Okay, if you think that it will boost the volume, but at the end of the day, we need to check both the things, volume as well as the price. Okay, uh, let us see what else we have. A hidden time bomb. A big short investor sees a financial disaster brewing in housing market. So I'm not going to open it. If you have some time, go and check out this news. It probably does have something very important which one must uh, read about. What you want to do with that information, that is up to you, but at least go and check it out. Apart from that, there is another geopolitical tension, and if you think that it does not mean anything to us, understand one thing: every country has some plus and some minuses, and in these kind of situations, I mean, whatever is on the negative side, it will remain be on the negative side. But whatever will be on the positive side, it will either turn uh, from positive to zero or from zero to negative. So these kind of things does not, do anything other than create a harm for the people as well as for the economy and for the stock market. I mean, the degree may be more or less, but yes. And this is one of the press release which actually caught my attention, because there is still a prediction that oil price will reach or will test $100 again, and the reason is very simple: because the OPEC and OPEC plus countries have already decided not to cut the prices by reducing the production, daily production, which simply means and they have given their excuse, and that is recession. So they don't bother about recession. What they do bother about, that we are going to make the oil price stable, so that the oil producers will not make much losses, and it could have lots and lots of things, both on the positive side as well as on the negative side. But meanwhile, market turns uncertain or market turns volatile. Okay, let us see what else we have. I think this is the most of it. Yeah, so let's go and check what is happening in the markets and what are the main headlines. So as far as the close is concerned, Dow Jones flat, Nasdaq flat, S&P 500 14 point higher, gold at 2023, oil trading near $80, closed above $80. Now US 10-year yield 3.35. Then VIX is at 18. We will discuss about VIX. Now VIX is a very important factor. Okay, and I'll explain you what would be the next probable thing which you can. If you don't understand VIX, obviously those who understand VIX, they know what to do, what not to do. Apart from that, yields has now again increasing higher. It's been increasing higher, and most specifically the short-term yields. It has started falling down, but then again you will see it's moving back higher. It's not about Fed. It is not at all about Fed, because things or contagion are spreading much faster, be it commodity, be it geopolitical tension, because everything is correlated or linked with each other. So you need to understand the consequences. Apart from that, US dollar index is trading at 102, and now the dollar index price movement is completely delinked with the equity market. If you think that now dollar index will go down and at the same time equity market will go up, this will happen 20 to 30% of the times. But for the rest, you will see dollar index is going down, equity market is going down, or vice versa, because market turns uncertain. That's the theme for the near future. If there is any change, I will definitely explain it to you. So I'll start doing analysis with the VIX. Okay, because VIX has now been falling down, and it's not only about the US market. Okay, it's also about the market across the globe. So if you are looking at the VIX, now VIX is moving down. Now if you are looking at the long term chart, this is the long term chart. Okay, so falling VIX falling down is actually a good sign, But the question over here is, uh, what does it actually means? Now the condition over here, which one must understand, that any uncertain movements or any uncertainty in the near future which we don't know yet will make a sharp turn as far as the price movement is concerned. Okay, if it is going lower, then overall it is good. I mean, when I'm saying it is going lower, I'm talking about these levels, which means I'm talking about 9.56 and in 8.5. But because VIX is very near to 17 and 14 and a half, which are the near term support level, so if it does not fall below these two levels, which simply means it is now at its support, and from here once it started moving higher, volatility will increase. So the positioning of the VIX is very, very important. Now understand one thing: VIX does not indicate the stock price movement. It will only indicate the contraction or the expansion of the volatility. And one thing is very, very clear: it will VIX will not tell you the change of the trend. It will just tell you the momentum, and as I told you, the expansion and the contraction. And let's say if the overall trend is on the downside, once it started expanding, once VIX started expanding, you will see full phase momentum on the similar side, on the downside. If the momentum, if the trend for the stock market is on the upside, and expansion in the VIX will create the similar kind of impact, and you will see fast paced stock price movement on the upside. So it will create an impact on the same trend. It will not give you an indication that the trend is changing. Now the problem over here is, because it is very near to the support, so we have to understand, what we have to understand over here is what will happen next. Is it going towards 8.5 or 9.5, or is it hits a near term bottom, and from here you will see a big price movement? So that's the big question. And if it, as I told you, if it hits the near term support, an increase in the volatility is not at all a good sign. Beg your pardon, volatility. Now the next thing which I want to analyze is the 6-month yield. Why I am telling you? Because previously I thought now the VIX, beg your pardon, the yield has already been topped out, as like many others. But now when I am looking at the chart and the price movement or the yield movement, it looks like a consolidation. Okay, it looks like a consolidation which is happening, and this is the 6-month yield. So I have taken the near term yield, which is happening in between 4.5 and 5.17. Although we do not calculate the percentage of percentage, but from the lower end to the upper end or to the close, it is up by 8.6%. So you can clearly see that it's been consolidating, and once all the moving average collide with each other, and if the yield started trading above all the above all the moving averages, you will see another spurt on the upside. So things have turned very, very interesting and very, very risky if you are a short term trader. Okay, and if you are a nuance, if you don't know how to deal with the stock market, these are very, this time is very difficult. But at the same time, this will create an opportunity for you if you are planning for the next 2 to 5 years, the least. Okay, where you can pick up some very good stocks, or you can make a portfolio of very good stocks over a period of time. But in the short term time frame, it will create a lot of volatility. Now let's go and check out the WTI crude, because crude will again play a very important factor, and an increase in the crude price will impact US economy, because last time we have seen very bad policies, and bad policies, it does not matter whether you are considered as the champion of everything, but when your policies are bad, everyone has to suffer. Last time US released their strategic oil reserve because they want to go green and they want to keep their words. That's fine, that's good, but what about the near term challenges? So for that they released their strategic reserves, and if the oil price started moving higher again, which it has been, so if WTI crude futures sustain above 73 and 75, which it is as of now, then the next immediate target that we are going to see will be $83, and it may expand up to, here we are technically beyond 83 or 84, it may expand up to 93 or 94 on the upside. So there is a positive scenario which we can see as far as the WTI crude is concerned, considering 75 is your support and 73 is your stop loss. So if it falls below 73, then the trend will change in the near term. Okay, so this is another thing which one must look at. Apart from that, let's discuss about the dollar index. As I have told you that right now it is completely delinked. If dollar index started falling, you may not see the impact on the equity market, but if it is started moving higher, things will be different. Okay, because dollar moving on the upside will not only a bad thing for the US market but across the globe, because dollar will find its strength, whereas the other currencies will become weak. Now if you are looking at the price chart of DXY, so with the stop loss of 101.5, it is now moving towards or in between 105 and 106. So it is not at all giving you a very in the short term for the next 1 week, and not so very good picture. And understand one thing, if it sustains or if it falls below 101.5, then we will talk about the negative thing, but because it is sustaining above 110.5, it is indeed a very positive thing for the stock market. Okay, now talking about the indices, because we have seen a very good move. Dollar index is moving down, and you can similarly see a big price action, because from the lower end of the range, Dow Jones has already moved by more than 7%. So this is indeed a very good move. So you can see that it is indeed making an impact. The dollar index is indeed making an impact, but the volatility, I stick with my word that in the short term, because the volatility is so high, I can't rely on one thing. Although dollar index is the major factor, you can clearly see over a period of time, if you are looking at dollar index, you can clearly see how dollar index and stock market has indeed behaved. But right now things are really uncertain, so each and everything moved individually depending upon the kind of news flow that particular segment has. So right now, if you are looking at the the Dow Jones has a limited upside as of now. So the two big upside which we are going to look at will be 34,300 and 34,600. But if it does not hold above these two levels, and somewhere in between the current price and the target price, if the trend reverses, then the next big downside will push Dow Jones in between 30,000 and 31,000, 30,700 and 31,000 for the next 1 week. So you have to be very, very cautious if you are taking any sort of trading, or any sort of position as far as Dow Jones is concerned. Now let's talk about the Nasdaq. So Nasdaq, you can clearly see, although the Dow Jones falls in the last couple of days, it has to be the Nasdaq which will perform the best, but you will hardly see any price action. And Nasdaq is Dow Jones was the best, and Nasdaq does not performed anything. And if you're looking at the price chart of Nasdaq for the short term, it is now trading at the resistance, which is beg your pardon, I think I have opened the wrong one, so beg your pardon for that. Okay, Nasdaq Composite, I have opened one company, so beg your pardon. Yeah, so for Nasdaq, it has already shown some big price action, and it is now trading above, or the close is very good, because it has maintained its breakout. So if you are looking at the price chart of Nasdaq, you can clearly see, here we are, you can clearly see a breakout above 11,500, 11,600 will remain a very crucial level. So above 11,500, 11,560, it will be considered as a breakout, where the next target will be 12,200, 12,300, and then the big target will be 13,184. So the Nasdaq is performing very well compared to Dow Jones, but I mean, at the end of the day, I am very cautious as of now. We will see how the trend behaves. So if you're looking at the very short term, Nasdaq is trading at or very near to the immediate resistance level. So we have to be, I mean, and in the short term, dollar index is also showing some sort of base formation, or it has tested the support level and started moving higher. So that's another thing which we need to look at. The last chart for this session will obviously be S&P 500, and if you are looking at S&P 500, it has indeed made a breakout. Let me show it to you. So you can clearly see a breakout above 4,107, but it is very near to its next immediate resistance, which is 4,198. And only if it surpasses 4198, Dow Jones S&P 500 will move towards 4,300 and 4,330. So this is what we are going to look at as far as S&P 500 is concerned. So breakout is there, but in all the three indices, I keep my close eye on it. Rather than taking any position, it would be good to observe the trend, and let's understand, because everything is data dependent, and in the next couple of days, it's not only for the upcoming week, it's also for the next couple of days or next couple of months, I would say. Things will remain volatile because the upcoming news flows will create huge amount of uncertainty going forward in the market. So if you are a short term trader, I will say one thing, and one thing very clearly: for short term trader, you must understand how to manage risk and uncertainty. But for long term trader, it is for long term investor, it will create a good opportunity, but over a period of next couple of years. So this is the end of the video. Thanks for watching.